Welcome back to price action trading series from Market Secrets. In this episode, we are going to talk about the fallacy of shorter time frames. Before we get into this episode 39, I would like to mention one thing here. We have recently started Algo trading series using Python. So if you are someone who is interested in algo trading, please do check out the algo trading playlist. With that note, let's jump into today's session, the fallacy of shorter time frames. My experience tells me that after you have finished the last episode, you most probably would have thought he's making valid points, but still, I want to be trading intraday. You might think, I'm sure I'll find a way to trade while my boss is not checking on me. You might think, I'm sure I'll find a way to trade in middle of my work. You might think, I have the right personality and of course I'm not like others. And you might think, I'm mentally and psychologically stable. But before you go ahead with intraday trading using lower time frames than daily, please do consider the following problems. Number one, the more I trade, the more money I make misconception. The more I trade, the more money I make. While it is true that the trading on shorter time frames create a lot more opportunities for trade execution, you need to keep in mind that your profit potential per trade is also smaller. How come? Do not forget that the smaller time frame move means lesser points or pips. You can simply identify this by measuring the pips or points from one extreme of the swing to another. So take any drop based rally or rally based drop and mark the two extremes and check the length of these extremes or height of these extremes in higher time frames and lower time frames. So if you see it, the higher time frames have more pips and lower time frames will have less pips. So the profits per trade or profit potential per trade is lower when you go to the lower time frame. That is what you need to remember. With every trade you make, your broker is also charging you a commission because they want your money. They are not doing any charity. They are also in the business of making money. So regardless of whether you win or lose, they'll still get their commissions. So you will lose most of your profits in the form of broker commissions if you trade on the lower time frames. So that's something you need to remember. And when it comes to trading, especially as a beginner, you should stay away from smaller time frames. Ideally, you should never go below 4-hour entry chart. That is my personal learning. But in the beginning, I would say you should stick to daily time frames or higher, as this gives you enough time to analyze and reflect and to focus on your trades. Because you are new, you need a lot of time to get a hold of things. You need a lot of time to make a decision. So daily time frame gives you that flexibility. So if you are a beginner, I would say stick to the daily time frame. So that's problem number one. Now problem number two is market noise. The lower one goes into the time frame, unfortunately, the less reliable supply or demand zone it becomes. Why? Because banks and institutions do not trade on lower time frames. It is the banks and institutions that are the dinosaurs, and these dinosaurs leaves a footprint. These footprints are visible on all time frames, but especially on daily, weekly, and monthly charts as our supply and demand zones. These imbalances exist on all time frames. However, the lower the time frame you go, the more you will lose focus on what the bigger picture is telling you. Let's take an example. Imagine you identify a 5-minute supply or demand zone, which is 5 ticks or 5 points wide, and an institution fires off an order for 2000 contracts or shares. Do you really think an FII or DII accumulates a position in a price range of 5 ticks? Do you think like that? It's not possible. They can't do it because their positions are so big that they cannot execute their orders in such a small range in the first place. For every buyer, there needs to be a seller. Imagine what would happen if a bank wanted to buy 2000 shares in the market all in one go at a specific price. The price would not execute because it cannot find so many sellers at such a small price range or at a specific price. The price movement on the lower time frames are generated mostly by retail traders and small portfolio managers. And as we all know, the majority of the retail traders and small portfolio managers are uninformed market participants. Otherwise, they would not be a small retail trader or a small portfolio manager. So that's problem number two. you need to differentiate market noise from proper trading opportunities, and it can be easily done on the higher time frames. That's why you should stick to the higher time frames. If you go down to the lower time frame, the noise will be much higher, so you will not be able to identify an opportunity from a noise. The problem is, if you are a beginner, you won't be able to differentiate between a noise and a proper opportunity. But if you give enough screen time, if you practice enough, you will be able to do it. So that's why at the start you should avoid lower time frames. And now problem number 3, our upbringing. From early on, we were told that the more we work, the more money we can make. This is true in most endeavors, but not in trading. A smart trader once said, "We are not traders, we are waiters." We have to wait patiently and only take action on high probability areas. Trading is not gambling. Trading is a business, and just as in any other areas of the business, profitable opportunities do not come along every 5 minutes. Again, I can only warn you for going down the intraday route too early in your career. Ultimately, it is your choice, but don't complain afterwards that you have not been warned. And with that warning, I'm closing today's session. If you have any queries, comments, or feedback about this episode, leave it down in the comment section. Also, like I mentioned earlier, check out our algo trading series using Python if you are someone who wanted to do algo trading. And if you like this video, hit the like button and share it with your friends if you find it useful. Also, subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.